Welcome to another episode of the SERMAPod, which is the podcast for the Sports and Entertainment Risk Management Alliance. I am your guest host, Matt Liller, and today I am very pleased to be joined by David Stamatis of Descartes Underwriting to discuss a very interesting topic of parametric insurance. So welcome, David.
Thanks, Matt. I appreciate it. Glad to join you today.
So, David, I am going to start with a question that I am sure you have answered at a cocktail party or two, and that is, what is parametric insurance?
That's definitely a question that I've been asked a bunch. So parametric insurance is also known as index-based insurance. Really, it's an insurance product where the event that we're insuring against is the policy trigger. So to contrast that with a classic insurance policy, specifically for property, for example, you have a piece of property, an insurance policy on it, it is damaged by a covered cause of loss, something like hail or a hurricane. Once that damage occurs, the insurance company sends out, that damage is the trigger for the policy coverage. The carrier sends out their adjuster, comes in, does his claims adjustment thing, and that process can take any amount of time from weeks to months. They adjust the claim, pay out the claim based on the coverages in your policies, and move on. The way a parametric policy is set up, in contrast, is the trigger is the event. So if you're looking at a hail storm or a hurricane example, we would set a policy trigger that says, all right, well, this Cat 3 hurricane, if it comes within 20 miles of your property, that's going to trigger an insurance payout equal to X percentage of Y limit that you purchased. So it's a really just kind of straightforward contract that is meant to address that specific peril, and meant to cover those perils in a way that ISO forms can't address. And specifically tailored to the event cancellation, they come with fast payouts because the coverages are predefined. Everything is laid out in the contract ahead of time. So once that event triggers, you've got coverage. There's no arguing with an adjuster. It reduces ambiguity, Everybody kind of knows what the contract language is and what the data sets are. So that's parametric in a nutshell. It's really that index metric that we set.
So you mentioned a couple potential triggering events. I believe you said, hail or hurricane. So is the triggering event for a parametric policy typically, a natural disaster or a weather-related event?
Typically it is. They're almost always weather-related events. There are some exceptions with regard to some pandemic insurance policies that are set up on a trigger like that. But yes, typically they're weather-related events, and the reason for that is you have to have a lot of data to underwrite these things, and the weather-related events with the modeling and kind of the data collection technologies that exist for us now are really what are making these parametric policies viable in the marketplace now. So short answer, yeah, it's mostly weather-related triggers.
You dovetailed into the next thought that popped into my head. You mentioned pandemic. And so pandemic-related parametric insurance policy kind of been defined or redefined in recent years. And how might a pandemic parametric policy differ from a weather-related policy?
The triggers would be different. So in a weather-related policy, we really use data-based triggers on temperature or hailstone size, strength of the wind from the hurricane we're looking at, strength of the shaking from the earthquake. So really those weather-related perils that's where my career is focused, and that's what Descartes focuses on. But the trigger for a pandemic kind of insurance policy would vary more along the lines of number of people infected or it being declared a pandemic by a government entity. It just kind of depends on where you want to set those triggers for the policy itself. And any amount of those related triggers, depending on what the trigger is and how likely it is to happen, that's what's going to affect your premium and loss payments and everything else.
So what is the relationship or the interplay between a parametric policy and a traditional policy? And for example, might someone or some entity count on or be dependent on both, or is parametric kind of more of an alternative to a traditional policy?
So parametric dovetails really well with traditional policies. It's part of the alternative risk transfer scheme for a lot of risk managers and a lot of brokerages. So it can replace certain perils. So there are times where, if you're in Florida, for example, you can write a policy excluding the peril of named storm and then pick up a parametric to carve out that peril. But really where these things do well is dovetailing with traditional coverages to provide kind of a backstop for those traditional policies. For example, if you have a large event that is subject to pretty large hail deductibles or rainfall deductible amounts, you can kind of pick up some of those in a parametric policy. A good example would be hurricane deductibles. They're 15% across the board sometimes in Florida now. And so the parametrics can kind of pick that up on a deductible policy form. We can carve out those coverages, or we can tack on to the existing limit that you have. But for the event cancellation and event protection policies, really where they play well is alongside an existing event cancellation insurance policy. Because these things are named peril triggers, they'll pick up the hail, they'll pick up the hurricane, they can pick up excess rainfall, excess temperature triggers. There's all kinds of things that especially outdoor events are exposed to that could not only cancel the event, but also reduce the revenue across the board. That's where the parametric can really step in and kind of pick up a piece of that. So if you have an event that really their main concern is going to be rain, they're not concerned about some of the other deal, we could set a rainfall, just specific rainfall trigger that says if there is, X amount of rain over a Y amount of period, or X plus 2 over a Y plus 2 amount of period, you can kind of set a graduated scale that says we didn't cancel the event, but we experienced a reduction in revenue due to this increased rainfall. It kept people away. It kept half of our grounds closed, all of that kind of stuff. And it allows us it gives us a lot of levers to pull to adjust the premiums and payouts to really kind of fit the event that the insured is trying to cover.
It seems that with the triggering events that we've been talking about, it seems like one of the key aspects of the triggering event is that it can be objectively measured, and it's not just people, perhaps minds can differ. Reasonable minds might differ on, whether there was 1 inch of rain or 3/4 of an inch of rain. What types of sources are being tapped into to verify the objectivity on whether the triggering event happened?
Yeah, that's a great question. And that's something that exists in every parametric policy. Is part of setting up the policy itself is agreeing on a data source. And specifically for a rainfall example, we might pick a nearby NOAA weather station that monitors rainfall, or for a larger event or for a larger area, we may have a rainfall sensor that is involved in the coverage policy or in the triggers. And all of that stuff is predefined, and there's always a third-party data validation service that is involved in this as well. So whether it's using NOAA data for rainfall, USGS data for earthquake shakes, anything like that, there's always a third party that serves as the person that goes in and says, okay, USGS just published this shake map. It shows that at your insured location, the shaking was greater than our policy trigger. The policy is, this is where the policy is triggered, and we get informed. The insurance company gets informed of that by that data validation service. So does the insured. So it reduces that morale hazard of the insurance company doesn't control the data, the insured doesn't control the data. It's always a third party. We use public data where we can. Some of this stuff, like with hail weather radars and stuff like that, we'll use a private company called DTN or CoreLogic. There's a couple of services out there that have that kind of thing, but it's always a third party that we don't control.
So David, how might SERMA members or the SERMA audience benefit from parametric insurance policies, particularly with respect to sporting events, public events, entertainment events, venues, those types of things? Can you give us some specific real world examples on how the SERMA audience might utilize these policies?
Yeah, absolutely. So the biggest thing is finding an event that, maybe they know that they're only exposed to one major catastrophic peril. So if it's something like a large horse race in the middle of the country, and really their main concern is a tornado or a hailstorm causing significant damage to either the grounds itself or keeping people away. And, some of that stuff is absolutely covered under your traditional event protection policies, and, as well it should be. But for, a large event that maybe that's the only thing that they're worried about, they can just go out and buy a parametric and deal with the rest of it on their own, and retain the rest of that risk on their own. The other option is you can carve out those perils at sometimes a cheaper rate from the event cancellation policies. And the other thing is they're very, very flexible, right? So these things come with the predefined triggers with lots of transparency. It reduces the ambiguity. Everything is settled beforehand in the contract. There's no loss adjustment process. But also part of that is the incredibly fast payouts that occur due to these things. So a lot of times these parametric claims, up into the tens of millions of dollars, are paid out in weeks rather than months. And so it kind of can help event organizers get these things back on their feet, help venue operators repair their venues quickly, and just get everything up and running in a much quicker way than you can going through the traditional loss adjustment period. And there tends to be fewer questions as well.
And I take it those faster payouts are kind of a direct response to the objectively identifiable trigger.
That's exactly it. Yeah. So while these are still insurance policies, so there still has to be some kind of indemnity piece of it, right? So the insured still has to suffer a loss because it is an insurance policy. But the way the claims process works on a parametric is the third-party data validation comes in and says, hey, this claim has happened. The insured fills out an affidavit that says we've suffered a loss equal to or greater than the payout that we're receiving under this policy. And then coverage is triggered and the payment is made to the insured once all of the data is validated and all that stuff. And what that means with regard to the economic loss for the insured is much more broad. So there's no sublimits in these policies. There's no exclusions. There's no defined route that the insured has to go through to spend this money. So what defines an economic loss for one insured might vary greatly from another. And, it could be pre-storm preparation. It could be finding a new venue. It could be rescheduling. It could be fixing the property itself if it is the event venue purchasing the policy. It could be things like landscaping that is just completely excluded or sublimited at a very low level under most ISO forms. So the definition of economic loss under a parametric policy tends to be much, much broader than you would find in a traditional ISO coverage form. And the payouts happen very quickly. And those are two very big benefits for these things.
And what about the application or underwriting side of obtaining a parametric policy? Sometimes, maybe on the smaller scale end of, sports and entertainment event planning, somebody might, organize an event and then, someone else says, hey, did anybody get insurance for this? And it's, oh, yeah, we've got to get insurance. And so, what's the, kind of the application and underwriting side of things? Is that also somewhat expedited as compared to a traditional policy?
So expedited, no. It tends to actually take a little bit longer than the standard like property policy, for example. But for something like a short-term event, the underwriting for these parametric policies can be very quick. And when I say a little bit longer, I mean we're talking a few days to weeks rather than 24 hours in some cases for some smaller event policies or some smaller property policies. So the lead time generally is a little bit longer, and some of that is because of the pure data, the raw data that goes into it, right? But if you're in an area that has robust modeling and the insurer that you're talking to understands the risk in that area intimately. They have strong modeling data. They've seen many submissions in it before. They can usually flip a quote around to you in 24 to 48 hours. We'd like to see more lead time on that, especially on larger risks. But the underwriting process itself, as far as information from the insured, is relatively simple. If you have an Accord app, please don't send me an Accord app. But if you have one, you have more information than I need. Basically, we need the named insured so we can do our OFAC checks like everybody else. We need the coordinates or address that you're looking to cover, the name of the peril that you're looking to cover, whether it's hail, tornado, hurricane, temperature, rainfall. One or more of those we can put on a contract. And then from there, just the limit of insurance that you're looking to buy, whether that's gross revenue from the event or you're just looking to cover expenses. All that's entirely up to you. And then from there, that starts the conversation of where do we want to set our triggers? If we're looking at a rainfall coverage, we work with the insured, but also look at the site that they're at, historic rainfall levels, and try to set a rainfall trigger that at X amount of rain, you're going to start seeing a reduction in revenue because we're expecting this many people aren't going to show up. Or at Z amount of rain, you're going to have to cancel the event because this venue is going to be a swamp. And so it's really simple. We just need the limit, the coordinates, and then from there we can start the conversations about the trigger points and pull those levers to do, whatever we need to do with the premium and the limit to get the insured covered to what they need to be covered.
David Stamatis of Descartes Underwriting, thank you so much for joining us today and teaching us all about the wonderful world of parametric insurance. Thank you so much. And please come back and speak with us again with any developments in this area.
Yeah, I would love to. Appreciate it.